18-month low for the loonie. Of course, the Bank of Canada flagging a number of downside risks for this economy. For a breakdown, we're joined now by Adam Button, Chief Currency Analyst at ForexLive. Good to see you, Adam.
Hi, Greg.
So let's talk about this change of tone that we got from the Bank of Canada. Obviously, when you look at their list of worries, they're all very valid ones. But what a difference from in October when they seemed so bullish on everything.
I know it's another black eye for Paul Oz and the Bank of Canada. We've been through this with them over and over, where they communicate one path of race, lead the market to believe one thing's coming, and then they switch gears rapidly and catch the market off guard. And it's added volatility to the Canadian dollar, and it's clearly caught the market off guard yesterday. And like you said, Paul Oz today again hinted that the Bank of Canada is headed to the sidelines for at least a few months, probably longer.
I think something a lot of people have heard recently and have not wrapped their heads around, you and I have discussed it before, okay, it's this idea of a neutral rate. It's simple enough to explain. It's the rate of that we're not trying to stoke the economy. We're not trying to tamp it down either. The thing is, people want to know, so what is it? What is that magic number? And the Bank of Canada today basically saying, we're not going to tell you. We won't even know what it is until we get there. So this doesn't really tell us where we're headed either, does it?
Yeah, I think a lot of central bankers started to breach this topic about 6 months ago, and they all regret it now. They delved into this and then started talking about, okay, we're near it, or we're not that near to it, or it's a range, or we don't know where it is. And it's really added a lot of noise and sent a lot of mixed signals to the markets. You have to remember, a central bank's job is to keep things as solid and steady as possible. And it's really done none of that, and it hasn't helped markets peg down what central banks are going to do. And I think they're slowly abandoning it in the U.S. and clearly in Canada.
Now, the market has clearly marked down the chances of a January rate hike from the Bank of Canada. A lot of economists saying the same thing. They're not ruling it out, but they think there's a pretty high bar to get over now. As you take a look at the situation heading into 2019, from a currency perspective, what's the market telling you? How many rate hikes do they think we'll get, if any?
Yeah, it's really dramatically changed. I mean, we were up over 65%, even 80% a few weeks ago for a January hike. Now, remember, today's appearance from Paul Oz is his last scheduled appearance before January 9th. Given the holidays, there's really no time for him to speak again and send out a different signal. So you could probably stroke January off, even though the market's still looking at something like a 15–20%. Then as you stretch out into next year, those numbers have all come down dramatically, and the market's starting to think the Bank of Canada might not hike at all until late next year. Now, a lot of that's already been priced into the Canadian dollar, and the reason you don't see it falling farther is because the American rates are feeling the same kind of pressure. There's a lot of talk now that the Fed might not even hike on December 19th, and that was something that was seen as a foregone conclusion even a week ago. So markets are rapidly changing, but as quickly as we've seen markets run into trouble, they can bounce back. I would caution that, yes, these are very variable, and especially in Canada, where the Bank of Canada has developed a habit of being extremely wishy-washy about what it's going to do.
Now, Governor Paul Oz did say as well that he's worried about global trade concerns, and that while he thought positive developments were made in the weekend in Buenos Aires, obviously the huge story right now internationally, not just in Canada, but the arrest of the Huawei CFO, of course, the daughter of the founder of the company, sending shockwaves through global financial markets. What does it do to the currency trade?
Well, I want to emphasize how we look at this trade. And the question is America trying to balance trade and curb intellectual property theft? Or are they trying to contain China more broadly? And if you look at an arrest like this, you have to think, you know what, this is more than just a trade spat. This is the start of major trouble between our two countries. And so that changes the equation dramatically. And if you look from Beijing's perspective, they're going to say, you know what, if we give a lot to the U.S. here, they're going to keep pushing because they're not really interested in just fixing some of these bilateral disputes. They want to curb China dramatically. And if you think of it in that perspective, from Canada's perspective, from the global growth perspective, well, it could be a major headwind in the year ahead, in the years ahead. And that is why you see the Canadian dollar struggling, oil struggling, risk assets struggling, and it all adds up to a tough time ahead until we get a clearer, more positive picture. And something we can really believe in from China and the U.S., because I don't think we're going to take Trump at his word anymore about any kind of deals.
And now, in the longer term for the Canadian dollar, does any of this, we take it together, the trade concerns, the dovish governor, the problems we have domestically at home, and oil is a big concern as well. Does any of it say good things about our currency through the winter? I can think of some people who like to head to the States over the cold months. They're probably not going to get a great exchange rate, are they?
No, but it's always darkest before dawn. A lot of this is priced into the market right now. OPEC tomorrow now is the big X factor. It's not looking very positive for cooperation at OPEC. If that cuts the rug out under from oil again, the Canadian dollar could be in for a real bruising. But barring that, I think we've seen a lot of the negative headlines. I think Trump looks closely at the stock market, and I don't think he wants to see a lot more days like yesterday and today, Tuesday and today. So, maybe he comes back around and they get a deal done with China. Nobody really wants things to get worse. He wants to get reelected, and it won't happen with markets like they are. So the Canadian dollar, for me, and domestically, the economy is solid. There are jobs everywhere in Canada, except for some places in Alberta and in the oil patch. But even there, I think the companies are looking more long term. So, the Canadian dollar situation isn't all that bad, and I think we're probably close to a bottom, barring any trouble in oil here.
All right, Adam, thanks for your time and your insight as always.
Thanks, Greg.
Adam Button, Chief Currency Analyst at ForexLive.